No problem. Okay.
Good morning, staff and students. I, on behalf of Kastuba Gandhi Degree and PG College for Women, Department of Commerce, welcome you all for a guest lecture on Basis of Accounting by Mr. Naveen Kumar, Assistant Professor, Villa Mary College. We welcome you, sir. Now I request Dr. R. Rashri, Vice Principal, Head, Department of Commerce, to introduce the speaker for the day. We welcome you, ma'am. Over to you. Thank you.
Thank you. Thank you, Sajida. Good morning, everyone. At the outset, I would like to congratulate the Department of Commerce, all my colleagues in the Department of Commerce for having this webinar today. On behalf of the management, principal, and the college, I welcome Mr. Naveen Kumar, who is the resource person for today's session on basics of accounting. Thank you, sir, for taking your time and having to talk on this very important topic, basics of accounting. I would like to introduce sir to the audience. We are indeed privileged to have a person of such extensive experience in the field of academics. Sir has a teaching experience of 18 years. He has written 15 textbooks for BCom, BBA, and on various other subjects. He's a recipient of many awards. He has had the Academic Excellence for Extraordinary Contribution, Bharat Ke Anmol Ratna 2019, in the field of modern accounting from Tejasvi Astitva Foundation, Delhi. Sir has also received an appreciation memento gem of a teacher from Reliance Jewels, Mumbai, on account of Teachers' Day in the year 2020. He has also received Excellence in Writing and Research Award from Ambitions Career Counselors, Hyderabad. Sir has, to his credit, published 7 articles in various national and international journals, and he is a professional member in the chapter head Hyderabad, Telangana for Research Foundation of India. He is also General Secretary for International Leadership and member of the Development Council, Hyderabad chapter. And he also has membership in International Association of Academic Plus Corporate Society. Sir, it is an honor to have you with us today. And I hope, and I'm sure many students will benefit from your webinar on basics of accounting. Thank you very much once again for accepting our invite. And I also want to thank all the students for being here with us today, and also the ICT team for their contribution. And a special thanks to Mrs. D. Kavita, who has organized this, Sushma and Sajida for their contribution to today's webinar. Thank you. And I hope all the students and faculty will have a great session. Thank you.
Thank you, ma'am. Hello?
Yes, we can hear you, sir.
Thank you, ma'am. Thank you, ma'am. Good morning, one and all. First of all, I would like to thank Kavita ma'am, Vice Principal ma'am, Sushma ma'am, and Saida ma'am for giving this wonderful opportunity. So now I'm going to share my slide, ma'am. Ma'am, can kindly host me, ma'am, so that I will share my screen. Hello?
Yeah, hello, sir.
Ma'am, kindly host me, ma'am, so that I...
Yeah. I'm doing, sir.
Yes.
Sir, now you are the host. You can share your PPT.
Okay. Thank you, ma'am.
Thank you, sir.
Ma'am, students are joining, ma'am. So...
So most of them have joined the YouTube link because to avoid the disturbance, okay, we have not allowed all the girls to join and join on YouTube. Join on your Zoom platform. So the students, 150 students right now, they are on YouTube, sir.
Okay, ma'am. Thank you.
166.
Oh, thank you, ma'am. Now I'm sharing this, ma'am. Okay, ma'am. So before starting my session, I would like to ask few questions, ma'am, to the students. So what is the main objective of business? What is the main objective of business?
Profit motive, sir.
Good, excellent. So the main objective of business is to earn what? Profit. Now, how to know whether we are getting profit or loss?
By maintaining an account, sir.
Good. Yes, correct. So 100% is correct. So we are going to know whether we are getting profit or loss by keeping the financial transaction, by keeping all the records of financial transactions, correct? For this purpose, we are using financial accounting. We are using what? Financial accounting. So here, financial accounting is nothing but art of recording, classifying, and summarizing the financial transactions in terms of money or monetary value. In terms of money or monetary value. So what do you mean by monetary value?
the transaction which is related to money, that only be recorded, and which is like credit, they won't be recorded. Nah.
Yes, you see. So monetary value is nothing but, okay, the events or assets or item which can be measured in terms of money. Okay, which are to be measured in terms of money. Those, okay, transactions are called as a monetary value. Those transactions are called as what? Monetary value. Is it clear? So in olden days, we are having only few transactions. In olden days, we are having only exchange method. Okay, so there is no need of maintaining all the financial records. But nowadays, we are having n number of transactions in a single day. So as a human being, it is difficult to remember all these things in our mind. So what we are doing, we are going to take the help of accounting. By keeping the records of all the financial transactions which have happened in the business, that we are going to record, we are going to maintain for knowing our financial position and profitability position. Why? Because we are human beings, we are having some limitations. It is difficult to remember all the transactions in our mind. So what we are doing, we are going to keep all these records in a paper. Okay, and by taking this information, we are going to prepare profit financial statement analysis, so that we can get whether we are getting, we can know whether we are getting profit or loss. So what are the objectives of financial accounting? Okay, here I'm giving some important objectives of financial accounting. Number one is what? To keep systematic records. Second one, to protect business properties. Third one, ascertain profits. Next one is ascertain the financial position. And next one is decision making. And last one is information system. So these are the most important objectives of financial accounting. So let us discuss one by one. The first point is what? To keep systematic records. The main objective of accounting is to keep a systematic record of all the financial transactions, which helps the user to understand the day-to-day transactions in a systematic manner, so as to gain knowledge about overall business. For this purpose, we are going to keep records of all the financial transactions of the business. Next one is what? To protect business properties. Okay, accounting provides protection to business properties from unjustified and unwarranted use. So information about the matters helps in the proprietor in assuring that the funds of the business are not necessarily kept idle or underutilized. It means by keeping the records of all the financial transactions, we can protect our business properties. Okay, and we can know how we are effectively we are using our resources. Okay, where we are using. For knowing that, we are going to keep the records of all the financial transactions. By keeping the records of all the financial transaction, we can protect our business properties. And this financial accounting helps in determining the profitability position of the business. Okay, and this is another objective of accounting, is that it helps in ascertaining the net profit earned or loss suffered on account of carrying the business, which is done by keeping a proper record of all the books of accounts with respect to revenues and expenditures of a particular period, Why? Because we are preparing financial statement for a particular period. For here, by keeping the records of all the expenditure and revenues, we are going to prepare profit and loss account. By preparing profit and loss account, we can know whether we are getting profit or loss. It means this financial accounting helps in determining the profitability position, you can call as profitability position of the business. And financial accounting is also helps in determining the financial position of the company or financial position of the business. Is it clear? And here the accounting also helps the businessman to know the financial position. To know the what? Financial position of the business. This objective is served by the balance sheet or position statement. We are going to find out the financial position of the business by preparing balance sheet. So balance sheet consists of assets and liability. So we are going to take assets and liability of a particular period, okay, only, and it serves as a tool for ascertaining the financial health of the business. So with the help of financial position, we are going to find out the liquidity position of the business and the solvency position of the business. Okay, by knowing the solvency and liquidity position of the business, we can say that our business is going smoothly or if we are having any problems in our business. And not only for knowing the financial position or profitability position of the business, it also helps in also helps in taking decision making. So accounting also helps the collection, analysis and reporting of information at the required points of time to the required levels of authority in order to facilitate rational decision making. So these are the most important objectives of financial accounting. Apart from this, we're having one more important objective, that is information system. So and this is the most important objective of accounting. And this information system of accounting is that it can be defined as accounting functions of an information system for collecting and communicating economic information about the business enterprise. This information helps the management in taking appropriate decisions. In taking what? Appropriate decisions. So these are the most important objectives of financial accounting. Now I'm going to explain the systems of accounting. So normally we are maintaining all the financial transactions in two different ways. One is single entry system and second one is double entry system. First one is what? Single entry system, and second one is what? Double entry system. So may I know the meaning of single entry system? Anyone? Or you can put it in the chat box also. You can write your answers in chat box also. What do you mean by single entry system? Anyone? Okay, let me explain. So single entry system of bookkeeping is the oldest method of maintaining financial records in which an entry is made for every financial transaction. In this system, the corresponding opposite entry is not made because the transactions are recorded only once. So single entry system is a system in which business transactions are recorded only once. So it may be debit transaction or it may be credit transaction. Here we are going to record only one aspect of transaction. So in every transaction we are having two aspects. One is debit transaction, second one is credit transaction. So under single entry system, we are going to keep the records of only one aspect. So it may be debit transaction or it may be credit transaction. So under single entry system, we are going to keep the records of only personal account. We are going to keep the records of only personal account. It does not keep the record of real and nominal account. It does not keep the records of real and nominal account. So without keeping the records of real and nominal account, it is difficult to prepare profit and loss account and balance sheet. So without preparing profit and loss account and balance sheet, we cannot calculate the exact profit of the business. Okay, it is difficult. Why? Because for preparation of profit and loss account and balance sheet, we require personal account information, real account information, and nominal account information. But in single entry system, we are going to keep the records of only personal account. We are not going to keep the record of real and nominal account. So that's why it is difficult to find out the exact profitability position of the business. Why? Because here we are not, it is not possible to prepare profit and loss account and balance sheet. That's why it is called as a defective double entry system. It is called as what? Defective double entry system. Single entry system is also called as a defective double entry system. Why we are calling as it is defective double entry system means here we are not following or we are not going to keep the records of real and personal account. Real and personal account. That's why it is called as accounts of incomplete records. Accounts of incomplete records, or you can call as a defective double entry system. You can call as what? Defective double entry system. So normally this type of systems are followed by the small business concerns such as medical shops, general stores. They are using this types of accounting system. This is what single entry system. So single entry system is also called as what here? It is also called as what? Defective double entry. Correct.
Defective double entry system.
Correct, Bhargavi and Lalita. 100% these are okay. This is correct answer. So single, why we are calling as it is defective double entry system?
Only
Because it is a
personal
record of
person.
incomplete record. Only the personal things are recorded, and nominal and real account are like neglected by the person.
Okay. Because of this reason, we are calling as defective double entry system. Correct. It is 100% correct. Good. Now come to double entry system. So what do you mean by double entry system?
Every debit, there is a corresponding credit of equal value.
Good. Correct. That's it.
For every transaction, there is a received benefit and there is a given benefit. So that's the reason double entry system is recorded.
Good. It means simply we compare to single entry system, we can call as here we are going to maintain all the records of personal, real, and nominal account.
Nominal.
Okay. So now double entry system is a scientific method of keeping financial records, and this system, okay, developed by Luca Pacioli in the year 1494. In the year 1494, double entry system was introduced in the year 1494. Roughly, you can call as 15th century. You can call as what? 15th century. This system is based on the principles of duality. This system is based on the principle of duality. Duality means two. That is, every transaction has a dual aspect. Each transaction affect two accounts at the same time. Okay, every transaction affects two accounts at the same time, in which one account is debited while the other is what? Credited.
Credited.
So most of the most of the companies, they are keeping the records of all the business transactions under double entry system only. Under what? Double entry system. And this double entry system was introduced by whom? Luca Pacioli. In the year
15th century.
15th century.
In the year
1494.
1494.
Correct year. So roughly can call as 15th century. Good. So these are the systems of accounting. Okay, so now I'm going to explain the types of accounts. So normally accounts are divided into two types. One is personal account and second one is impersonal account. First one is what? Personal account.
Impersonal
Personal
account.
account.
Impersonal account.
Personal account.
Good. Sri Lakshmi, Lalita, and roll number 101. Correct here. And Bhargavi. So accounts are classified into two types. One is personal account. Second one is impersonal account. And this personal account again classified into three types. One is what? Natural persons.
Natural,
Artificial
Artificial representative.
representative.
Good. So this personal account again classify into three types. So normally personal account relates to persons. Personal account relates to what?
Persons. Persons.
Okay, these persons are classified into three types. One is natural person. Second one is what? Artificial person.
Artificial account.
And
Representative
third one is
personal.
Representative
person.
yes, correct, Nandini. So natural persons are human beings. Correct? Natural persons are human beings. Therefore, we include the accounts belongs to them under this head. For instance, debtors, creditors, capital accounts, drawings, all comes under natural persons. Correct?
Yes, sir.
So whenever we are getting these names in the transaction, it is connected with what? Personal account. Correct? Next
Yes,
one
sir.
is SGO. Next one is
Account
artificial
relates to group of person.
SGO. Correct. Okay, personal account relates to group of persons. Correct. So artificial personal account. So artificial persons means what here?
It's related to those persons
Group
which
of
are created
persons
by
or
law.
institutions. Or companies, law companies.
Correct. So artificial persons are not beings, but can act and work like humans. Correct? They have a separate
Yes, sir.
identity in the eyes of law and are capable to enter into agreement. So these includes HUF, that is Hindu Undivided Family Business, partnership firms, insurance companies, cooperative societies, and
cooperative society.
joint stock companies, municipal corporations, hospitals, banks, government bodies, and you can take best example of your college. This is also comes under artificial persons. Okay, Usman University, JNTU,
Okay.
okay, and Kasturba College, all colleges, okay, all institutions comes under the term artificial persons. And third one is what? Representative personal account. Good. So these accounts represent the accounts of natural or artificial persons. When the expenses become outstanding or prepaid and income become accrued or unearned, they fall under this category. So all outstanding expenses, sorry, all outstanding expenses and prepaid expenses and income become accrued or unearned. There comes under this representative personal account. For example, outstanding salaries, prepaid rent, outstanding incomes, that is accruing interest or accrued rent, whatever it may be. And so these are the examples for personal account, that is representative personal account. So personal account relates to the term persons. The term person include natural persons, artificial persons, and representative persons. Okay, so whenever we are getting these names in the transaction, immediately we have to go for personal account. And what is the golden rule for personal account?
Debit
Debit the receiver, credit the giver.
the receiver, credit the giver.
Good. Debit the receiver,
Credit
credit the
the giver.
correct. So who is called as receiver and who is called as giver?
The person who
The person
receives
who
something
receives
from the
The
other
person who
person
receives the
is the receiver, and the person who give to the other person he call as receiver. For example, we are purchasing something, sir. So so Suresh purchased a furniture. So Suresh is receiving the furniture and he is paying the cash.
Good. Correct. So here, okay, receiver means the person who is getting the benefit is called as receiver, and the giver means the person who is giving the benefit to other person. It's called as what? Giver.
Credit.
Okay, so receiver should be debited and giver should be
Credited.
credited. For example,
credited.
yes. So I'm taking one example here. Cash paid to Suresh. So this is what transaction here. Cash paid to Suresh. It means what? We are paying cash to whom?
Suresh.
Suresh. Correct. So who is person here?
Suresh.
Suresh person. Correct.
Yes.
So whenever we
Yes,
have
sir.
a personal, okay, person name in the transaction, it comes under which account? Personal, real or nominal account?
Account. Personal account.
It comes under personal
Personal
account.
account.
So who is Suresh, giver or receiver?
Receiver.
Receiver, sir.
So as per personal account, debit the receiver, credit the giver. So whom we should debit here?
Suresh.
Suresh.
Suresh. So Suresh should be debited.
Debited.
Okay. So I am taking one more example here. Okay. Cash deposited into the bank. So
Bank
transaction is what?
receiver.
Cash deposited into the bank.
Bank receiver.
Who is person here?
Bank.
Bank. Correct. Receiver or giver?
Receiver.
Receiver. So bank comes under personal or real?
Personal
Personal.
So as per personal account, debit
Debit the
to your
receiver.
receiver. So here what we have to debit? Bank.
Bank.
So bank will be debited.
Debited.
So like that we have to identify each and every transaction. Okay. So I am taking last example in case of personal account. Cash withdrawn from bank.
Bank.
So
Sir, Naveen sir, sorry
Yes.
for interrupting you.
Yes, ma'am.
Just sir, a few participants are waiting. So can you allow them? Can you
Yes.
admit them, sir?
Yes, ma'am. Done, ma'am.
Yeah, thank you, sir. And also, please put your slides in a full screen, sir.
Okay, screen mode, ma'am.
Yeah,
Okay, ma'am.
thank you, sir.
Thank you. Just a minute, ma'am. Sorry, my laptop keys are not working properly. Hello?
Sir, you are on mute. Hello, sir. Sir, you're on mute, sir. Unmute yourself.
Now it's.
Yes,
Am I audible,
yes.
ma'am?
Yeah.
Yes, yes, ma'am. So now, cash withdrawn from bank. So cash withdrawn from bank means here we are withdrawing cash from whom? From
Bank.
Bank.
So who is person here?
Bank is a giver.
Bank is a
Bank is a.
giver.
So what we have to do? We have to debit or credit?
Credit, sir.
Credit, sir. Credit.
Credit. Let me explain. Here, bank. We are withdrawing cash from bank.
Bank.
So who is person here?
Bank.
Bank. Now, bank comes under
Personal account.
Personal account.
personal account. Bank comes under personal account.
Account.
And bank giver or receiver? Who is giver here?
Bank is a giver.
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 Giver should be
Credited. Credited.
like that. We have to identify each and every transaction. Is it clear?
Yes, sir.
Are you able to understand this concept?
Yes, sir.
Yes, sir.
Yes, sir.
If you are having any doubt, kindly tell me. Madam. Now, come to real account. So, here, impersonal account classified into two types. Okay, one is real account, second one is
Nominal.
nominal account.
Nominal account.
First one is what?
Real
Real
account.
Nominal account.
And
Nominal
what?
account.
Nominal.
Nominal account.
So, real account relates to
Assets and goods.
correct?
Yes,
So,
sir.
what do you mean by assets?
Properties.
Assets.
Obligations which belongs to the business.
Business. Yes, sir.
Okay, correct. Next.
Goods. Assets means
Which include
purchasing
tangible
of
and
goods or
intangible
something
accounts.
else. Yes, sir. Includes tangible and intangible
Tangible
goods.
accounts.
Good. Let me explain. Correct here. Assets means which are owned by the business.
Business.
So these assets are classified into two types.
Two types.
Tangible and intangible.
Tangible
Tangible and
assets.
intangible
Intangible assets.
And intangible assets.
assets.
Tangible assets and intangible.
Tangible assets.
So what do you mean by tangible assets?
The
assets
assets
which
which
are
we can
physical
see and touch, we can touch, feel and sense.
Good. Correct. Tangible assets are those assets which can be seen, touched, or felt. Correct.
Yes, sir.
Yes, sir.
For example,
Machinery,
Machinery,
furniture,
machinery,
land and buildings, furniture, motor vehicles,
Stock.
stationery.
furniture and fixtures.
correct, correct. So these are the examples for tangible assets.
Tangible assets.
So tangible assets are those assets which can be
Seen, touched,
touched,
We can see,
Touch
touch, feel.
feel.
right, which can be seen, touched, or felt. Those assets are called as tangible assets.
Assets.
So we can take the examples of machinery, land and buildings,
Land and building.
leasehold
Furniture.
property, furniture. So
Motor vehicles.
cash,
as cash, or these are comes under
tangible.
Tangible
Assets.
okay. Intangible assets means what here?
We can
The
see, but
we can't see,
touch.
sir.
We can't
We can see but we cannot
We can
touch.
see, but
touch.
we cannot touch. Feel.
We can see, but we cannot.
Touch.
Touch.
Example.
Goodwill.
Copyrights.
Goodwill, copyrights.
Trademarks.
So goodwill cannot see, or we can say here, we cannot see goodwill, touch, or felt. No, madam.
Patents. Copyrights.
Right.
Trademarks.
Goodwill, patents,
Trademark.
Copyrights.
trademarks, and
Copyright.
copyright. These are the three examples
Copyrights.
for intangible assets.
Intangible.
So intangible assets means we cannot see, touch, or
Touch.
felt.
Felt.
Okay. So these are the assets. So actually assets are classified into two types here. One is fixed assets and second one is
Current
current
assets.
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 So assets are classified into two types, fixed assets and current assets. So let me explain first what do you mean by fixed assets. Fixed assets are those assets which are to be used for more than 1 year. More than 1 year.
1 year.
Those assets are called as what?
Fixed assets.
Fixed assets. And these fixed assets again classify into two types, tangible assets and intangible assets.
Intangible assets.
So these tangible and intangible both are comes under fixed assets.
Fixed assets.
Okay. So whenever they are asking, okay, what are the types of assets, means first we have to classify like this, fixed assets and current assets.
Tangible.
So fixed assets again classify into
Tangible assets and
Intangible.
intangible assets.
Intangible assets.
correct. So fixed assets are those assets which are to be used for more than
1 year.
1 year.
1 year. Okay, example,
Land.
365 days or 52 weeks, okay, or 12 months. If you are using more than 12 months, or if you are using more than 365 days, then those assets are considered as fixed assets. Correct?
Yes, sir.
Yes,
Good.
sir.
Now, come to current assets. So what do you mean by current assets?
Which is used more than, which is used less than 1 year, sir.
Okay, good, correct. Correct here. So current assets are those assets which are to be converted, into the cash within a short period, So short period means here 1 year or 12 months or 52 weeks or 365 days. Those assets which are to be converted into the cash, those assets are called as current assets. Example, what here?
Sundry
Sundry debtor.
debtors.
Because
Bills payable.
Bills
bills payable or receivables here?
Receivable.
Bills receivables,
Prepaid expenses.
good. Prepaid expenses,
Short-term investments.
good. Short-term investments, correct. Next, that's it.
Yes.
Okay, cash in hand, correct. Cash at bank also comes under
Current.
current assets. Next, one more important item is there here.
Inventory.
Good. Inventories, it is also called as
Current.
stock. So these assets we can convert it into the cash within 1 year. Is it clear?
Yes, sir.
So real account relates to what?
Assets. Assets.
So assets are classified into
Two.
Fixed assets and current assets. Current assets.
fixed assets and current assets.
Current assets.
So what do you mean by fixed assets?
The assets
used for more than 1 year.
more than 1 year.
Use than more than 1 year.
Examples?
Tangible and intangible.
Tangible.
No, I'm asking example.
Furniture, land.
Furniture,
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 land,
buildings,
land,
lands,
Land and buildings.
stationery.
machinery.
Land, buildings,
Correct. So what do you mean by
machinery.
tangible assets?
The
can
assets
touch,
which we can
feel,
see and touch and
Can be
feel,
felt.
touch.
Okay, good. Intangible assets means?
Which
we
we cannot
cannot
touch and which we
see,
cannot
Not touch.
felt,
Cannot
and
be touched.
Touch.
Which
we
doesn't
cannot
have
touch.
physical.
Can see, but we cannot touch.
Okay, good. Correct. Dear. Just a minute. Okay. So these are the examples for tangible and intangible assets.
Tangible assets.
Now we can take few examples to know the real account. I'm taking the same examples here. Cash received from Suresh. Cash received from Suresh. Correct? So here we are receiving cash from whom?
Suresh.
Suresh.
Suresh. Correct.
Suresh.
Who is person here?
Suresh.
Suresh comes under
Personal account.
Account.
personal
Account.
account. So personal account says that debit.
Receiver.
The
Receiver,
credit the giver.
Correct. So here Suresh giver or receiver here?
Receive.
Receiver.
Cash received from Suresh. Cash
Giver.
received.
Giver.
Giver.
Givers.
Giver.
Giver. Giver should be
Credited.
Credited. Credit the giver.
dated. Correct. So here what we are receiving?
Cash.
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 The cash comes under
Real account.
Real
Real
account.
account.
real account. See, it comes under assets.
Asset.
Real account. Real account says that
Debit
what
what?
is the rule for real
What
account here?
comes in? Credit what goes out.
Goes out.
Good. Debit what comes in,
Credit what
credit
goes out.
what goes out. So here what we are receiving cash. It is coming into the business, Amita.
Yes.
Yes, sir.
Coming means we should debit or credit here.
Debit.
Debit.
Debit. Okay. Now I'm taking one more example here. Cash deposited into the bank. So I'm taking same examples again. Cash deposited into the bank. It means what? We
Bank
are
is
the receiver.
Bank is a
Bank is the
Receiver.
Receiver.
So here we are depositing our cash in the bank. Now identify two transactions here. One is what? Person. Who is person here?
Bank and cash.
Bank is a
Bank and
person.
cash, sir.
Bank is a personal account. Credit.
Cash is
Cash is real account.
Cash is a real account.
Giver. So we should
Credited.
credit. What we are receiving here? Cash is going out with that. Cash
Real
Real
account.
account.
in the account going out.
Out.
So it should be
Debited.
Debited.
Sir, bank is receiving. No,
Yes,
sir.
dear.
It's a receiver. You have
bank
to
is
write it.
receiver. So we should
Debit.
Cash is
Debit. And cash is
going out.
going real account, so
Credited.
credited.
Created. So like that we have to identify. See here, in every transaction, we are having two accounts. One is debit and second one is what? Credit. Means we are following single entry system or double entry system?
Double entry system.
Double entry system.
Double entry system. It means for every transaction we are recording debit as well as credit. So whenever we are identifying whenever we are recording debit as well as credit, Okay, then it comes under
Double entry system.
double entry system.
Entry system.
Suppose we are recording only one transaction. Example, we are recording only bank or we are recording only person. That comes under
Single
Single
entry
entry
system.
single entry system. Correct, dear?
Yes, sir.
Yes, sir.
Now we have to discuss about
Nominal account.
nominal account. Okay. So nominal account relates to
Income and expenses.
and
Expense.
Income.
Expenditure and incomes.
good. So nominal account says that
Debit all expenses and losses, credit all incomes and gains.
and gains.
correct, dear. Debit
Debit
All
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 expenses
expenses and
and losses.
and all
expenses
income
and
and gains.
losses.
Losses,
Credit.
credit all
All incomes
incomes
and
and
gains.
Gains. So now, what do you mean by expenses, dear?
Expenses.
what we spent.
What we spend every month.
Purchasing of materials, goods,
Okay,
salary paid.
Goods
correct.
and for salary.
Good. So expenses is nothing but any amount spent on producing the product or providing the services.
Salary,
That is called as what? Expenditure. That is called
expenses.
as what? Expenditure.
Expense.
Any amount incurred for producing the product or for providing the services. That is called as expenses.
Income.
Okay. And incomes means what, dear?
What we
What we
gain.
get,
What we gain.
What we get.
get or receive.
Normally, incomes
Profit.
we are getting from our investments, correct?
Yes, sir.
Yes, sir.
Yes, sir.
So whenever we are having expenses and incomes, losses and gains, that time we have to take what? Nominal account.
Account.
And
sir.
nominal account says that debit all expenses
expenses,
and losses,
Credit all
Credit all
incomes and
Credit all
gains.
incomes and gains.
Income and gains.
Yes. Now, example.
Salary, stationery.
Salaries paid. So salaries paid means we are paying salaries to our employees. Now tell me the difference between salaries and wages.
Salaries means we are getting
For monthly we are
Monthly.
giving.
For
monthly
monthly
we are
we are
receiving.
paying.
Weekly.
This
For
and
daily
daily
purpose or weekly purpose we
Wages,
receive.
daily
Right.
wages.
So salaries we are paying to our employees and wages are paying to
Labor.
workers,
Workers.
laborers. Correct. So here salaries paid. Okay, how we are paying salaries, in the form of cash or check?
Cash.
Cash, sir.
Cash
Nothing
or
is
checks.
mentioned. We should assume that it is paid in the form of cash.
Cash.
So salaries paid. So enter will be what? Your salaries we are paying to our employees. So it comes under.
Expenses.
So expenditure comes under.
Nominal account.
Account.
Debit account.
So we should debit or credit.
Debit.
Debit.
How we are paying salaries?
In the form of
Cash,
Cash.
sir.
Form of
Cash
cash.
comes under.
Real account.
Real account.
real account.
And it is going out from the business.
So it should be credited.
It should be credited.
Credited.
Credited. So again we are having two accounts. It means every transaction include one debit item and second one is
Credit
item.
item.
Okay, then only it is called as a double entry system.
Entry system.
Good. And double entry system was introduced by whom?
Luca
Pacioli. Right.
Luca Pacioli.
Good. In the year
1994.
1494, or you can call as a
15th century.
15th century. Good. So here we are paying salaries to our employees. So salaries comes under an expenditure and cash is going out. And similarly, you can take one more example. Salaries paid to X. Now tell me, Leo, what entry we should write for this?
Salaries,
Salaries paid.
personal
Same
accounts.
entry.
Same entry, Leo?
Yes, sir.
Yes, sir.
Sure?
This is a personal account, sir.
We should not mention any name.
Correct.
Because it's already paid, so it's not credited that we have. It's not outstanding salary, no, sir. It's already paid.
100% correct here. So most of the students, they are doing mistake in this particular transaction. So normally what they are doing means here person name is there, so we have to consider person name. So we should debit person and cash they are going to credit. So
Yes.
most of the students, 99%, 90% students are doing this type of mistakes in the examination. So salaries paid, salaries anyhow we are paying in the form of cash only. Correct? And salaries comes under expenditure. So we should write the same entry. Salaries account debit to cash account.
Cash account.
Cash account. Okay, we should not take X name here. Okay?
Okay, sir.
Yes, sir.
Rent received. So what we are receiving here?
Rent.
Cash.
Form of
Cash,
cash.
sir.
Form of cash.
In the
So
form of
rent
cash.
we are receiving, rent comes under income.
Cash. Income.
And normally we are receiving rent in the form of
Cash.
cash comes under
Real account.
Real account.
account and it's coming into the business.
Coming into the so business. So it should be debited.
Debited. Debited.
Next, rent comes under
Nominal account.
Income.
Account.
Nominal account.
nominal account.
Credit.
Credit.
Credit. Good. So like that, we have to find debit transaction and credit transaction.
Transactions.
Once we know how to find out, once we are knowing okay how to determine the debit and credit transaction, then account is nothing new. Okay, so most of the students are doing mistakes in identifying debit transaction and credit transaction. So here, just I want to share one more item here. Transaction, just a minute here. So normally transactions are classified into two types. One is cash transaction. Second one is
Credit transaction.
credit transaction. What is the difference between cash transaction and credit transaction?
Cash is directly we are
Paid,
giving. Credit means in pay.
Please, whenever transaction happen, immediately cash is involved. When cash is involved immediately, then it comes under cash transaction.
Transaction.
Credit transaction means what?
There is no
Cash is not involved.
Transaction,
Only
not
check
paid
is
in
involved.
but amount will be paid in
Bank.
future.
date.
Future, sir.
That is called as credit transaction. Okay. So here, whenever cash transaction is there, in case of purchase and sales, we should not consider person name. We should not take what? Person name in case of purchase and sales. But in case of credit transaction, we should consider person name.
Person name.
Okay. Example. Purchases. Okay. I'm taking examples of purchases. Goods purchased for cash. So here goods purchased for cash. So it comes on the cash transaction or credit transaction?
Cash transaction.
Cash transaction. Why? Because cash is mentioned. transaction, correct? Right. But okay, what entry we should write for goods purchase for cash?
Purchase account.
Purchase account
Purchase account
data
data
account
to
data.
Cash account.
cash.
Correct. So I'm taking one more example here. Goods purchased for cash from X.
Same transaction.
Same transaction.
Same
Correct.
transaction.
So we should take same transaction, or we should write the same entry, that is purchase account debit to
Data to cash.
Cash account.
cash account. Okay. If it is credit transaction, example, goods purchased from Mohan.
Mohan.
Mohan account. No. Purchase account
No,
data
purchase
to
account
Mohan
data
account.
to Mohan.
Mohan
Purchase
account data to
account debit
data to Mohan account.
to Mohan
To
account.
Mohan account.
Now let me explain the difference between cash transaction and credit transaction. In case of cash transaction, we are writing cash here. Okay. But in case of credit transaction, instead of cash, we should write what?
Mohan.
Person account.
Person name.
Person name. Why we are writing person name means we have to identify, we have to remember that still we have to pay so and so amount to so and so person.
Person.
Okay, for this reason, we are writing person name in case of credit transaction and cash in case of cash transaction.
Transaction.
So that we can identify if once we are receiving the cash, okay, in the situation we are not having any connections with the particular person. So we are ignoring that person name. Okay. But in this credit transaction, case of credit transaction, still we have to pay that amount. And we should know to whom we have to pay. For this reason, we are writing what? Person name.
Person name.
And last topic here. Just I want to discuss few important transactions. 100% you will get these transactions in the examinations. Number one, goods distributed as free sample. So goods distributed as free sample means what? Sometimes, okay, companies are offering some goods, okay, they are providing some goods at free of cost to promote their product in the market. Correct?
Advertisement, sir.
For what purpose they are promoting? For what purpose they are distributing as free sample? To promote
Advertisement.
To promote the sales.
to promote their products. Correct?
Yes, sir.
Nothing but advertisement. Nothing but what?
Advertisement.
Advertisement. So advertisement comes under expenses or income?
Expenses, sir.
Expenses.
Expenses. So and there will be what?
Advertisement account data
Account data to cash.
cash account.
Cash account.
Purchases account.
So I'm giving two options here. Find out which one is correct. Cash. Purchases. Find out which one is correct.
Purchase is correct.
Purchases.
So 100% correct. It is
Purchases.
purchases. So why we are creating purchases?
Because we are purchasing the goods and distributing as a free samples.
Okay, for distribution of free samples, first of all, we have to purchase the goods from the supplier and then we have to
Distribute.
Distributor.
you can take the best example for this transaction here. Best example, live example. Let me explain. So here, normally we are watching televisions, correct?
Yes, sir.
Sir.
Now we are seeing advertisement of Santur soaps.
Yes, sir.
Yes,
If
sir.
we are buying two Santosh soaps, we'll get one pen free.
Yes, sir.
Okay. Is there any connection between pen and soap?
No.
No,
No,
sir.
sir.
But they are distributing what?
Pen.
Pens.
Pen and soap.
For what purpose they are giving pens at free of cost?
Advertisement purpose.
To promote their product.
To promote their product.
Promote
Yes.
the product.
So, actually what they are producing,
Soap.
Soap.
but they are not manufacturing pens.
Yes.
They are
Yes.
Yes, sir.
It means first they have to purchase pens from the manufacturing company, those who are manufacturing pens, and then they have to distribute. Correct? It means
Yes, sir.
purchase value decrease or increase? Decreasing.
Increases.
Decreasing. First we are purchasing and we are distributing as free sample.
Yes.
From purchases, stock will be decreasing. Correct?
Yes, sir.
So normally purchases shows debit balance. To decrease the value of purchase, we are showing in credit side.
Credit side.
So enter will be what? Advertisement account debit to purchases account.
Purchases account.
Purchase
Or
account.
is it right?
Credit.
Yes.
Credit.
Promotion account debit to purchase account also. Okay, both are correct. Promotion account debit to purchase account or advertisement account debit
Advertisement
to
account.
purchase.
Purchases account.
And next one is outstanding salaries or expenses. These questions definitely will get for short question, 100%. I'm sure that you will get at least 2 questions from this adjustment entries. Okay. So outstanding expenses means what? Outstanding expenses means still we have to pay. Okay. Still we have to pay means it comes under assets or liabilities.
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 Liabilities always shows debit balance or credit balance.
Credit balance.
Credit balance.
Good. So here entry will be what?
Expenses
Account
data.
outstanding expense.
Outstanding.
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 Outstanding expenses account.
Account.
So similarly, we are having prepaid expenses, accrued income. So these are the few examples of adjustment entries. Sometimes we have to write adjustment entries also. Okay. Now, just I want to play a game. Okay, which is related to our subject. Just a minute. Okay. Liz, are you able to see my screen?
Yes, sir.
Yes, sir.
Yes, sir.
So here, just a minute. Now I'm sharing this link in chat box. Kindly check your chat box.
Yes, sir.
No,
Yes,
it won't.
sir.
Okay, click on that link and use this code. By click on that, you will get the questions directly. Kindly click and participate in that particular quiz here. Monica. Are you able to see my screen? Girls, are you able to see my screen?
Yes, sir.
Okay. Monica, Nandini. Siri, Tara. Samyukta, right? Right, Pratisha. Girls, kindly attend. You started. So these are the points. Within 15 seconds, you have to answer for each question. So overall, topper Nandini, second position Pratyusha, third position Samyukta, next Sai Priya and Siri, fifth position. So like that, kindly appreciate these girls. Girls, kindly appreciate those who are part. Okay. Okay. So this is what my session. If you are having any doubts, kindly unmute yourself and raise your doubts. Hello?
Yes, sir.
Yes, sir.
If you're having any doubts in this session, kindly unmute yourself and raise your doubts. Hello? Okay.
Girls, any questions from your end, girls?
No, ma'am. No, ma'am.
No, ma'am.
No, ma'am.
Thank you, sir, for your valuable inputs. Now I
Thank you,
call
ma'am.
Sajida ma'am from Department of Commerce to propose vote of thanks.
Thank you, Monica. Honorable Speaker, respected ma'am, and my dear participants, it's been my privilege to have been asked to propose a vote of thanks for the session. I, on behalf of Kasturba Gandhi Degree and PG College for Women, Department of Commerce, and the entire team extend a very hearty vote of thanks to the Speaker, Mr. Naveen Kumar, for enlightening the students on basis of accounting and sharing with us his important work and findings today. I also wish to express my gratitude and sincere thanks to Vice Principal and Head of the Department, Dr. R. Rashri, for her encouragement, guidance, and logistic support she always extends towards us. Thank you so much, Mom. I also extend my thanks to Ms. D. Kavita, coordinator and convener, for organizing this event. Last but not the least, I thank all the staff and students for being the lovely audience for the day. Thank you all once again. Thank you, sir. Thank you,
ma'am.
girls.
Ma'am, I would like to thank Vice Principal Ma'am, Rajshri Ma'am, Kavita Ma'am, Sajida Ma'am, Sushma Ma'am, and Sanjana Ma'am.
Thank you, sir.
ma'am. And all the students who are patiently listen my session. And I would like to thank to management of Kasturba Degree and PG College for giving this wonderful opportunity to share my knowledge.
Thank you, sir. Thank you.
Thank you, ma'am. Thank you.
Okay. Sir, can you please tell us the name of the game?
Ma'am, Nearpod, ma'am.
Sir, can you repeat? Spell it, sir, once, please.
Near. Now I'm sending in chat box. Nearpod.
Thank you, sir. Thank you so much.
Thank you.
Okay. So, girls, we end our session for the day. It was lovely having you with us, sir. Thank you all, girls, for such cooperation. Thank you.
Thank you.
Thank you, ma'am.
Thank you, ma'am.
Thank you.
Thank you, sir.
Thank you, ma'am.
Thank you, sir. Thank you,
Thank you,
ma'am.
sir.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you, sir.
Thank you. Yes, post Jesus. Post.